Hey, what's up, everyone? Welcome back to Partners Corner, the place where you can find everything you need to know about the partnerships and all the services that you need for real estate to make sure your clients have not only an exceptional transaction, but an experience like no other. Excuse me. Because remember, at the end of the day, the experience, the wow that comes to the buyers and the sellers are what brings the referrals, and that's super important. I'm excited here today on our second Partners Corner to have Tom Hall here from Coast One. Tom, welcome.
Thank you. Appreciate it.
Could you do a quick introduction of yourself?
Oh, geez. Tom Hall. I work out of the Streetsboro office. I cover mainly the east side and help a lot of the agents there best I can to get their clients pre-approved or give them a second look if they already have a pre-approved.
Okay, and we'll talk about that second look here in a few minutes because that's pretty important. But you say you primarily work on the east side, but you can go anywhere in the state, right?
I can go anywhere in the state. I have clients as far as the Toledo area, all the way down south, and all the way to almost Pennsylvania.
And although we are partnered with Coast One and it's a premier partnership for us, you have clients from all agents.
All agents, anywhere in Ohio. And keep in mind that Coast One is also in Michigan and Florida. And we have other loan officers that are licensed in other states outside of there as well.
So you're in here today representing all of them.
All of them.
I like
pressure's on.
It is. You're exactly right. The pressure is on. So why don't we jump right into the pressure? Now let's talk about the pressure in the industry right now because I think it has a huge. I don't know if I want to say the word impact, but it has a huge chance for really strong partnerships, and that is the bringing in buyer representation.
Sure.
Right. Bringing in buyer representation and buyers out there, which obviously you work exclusively with buyers out there having to pay for the agent's commission starting right off the bat.
Correct.
And how does that affect lending? So let's talk a little bit about that.
Sure. What would you like to know? Because some things have not changed at all.
Okay, tell me what hasn't changed.
Well, your sellers can absolutely still pay for the buyer's commission. And that is, I think we'll end up finding that that's kind of going to still be the normal, especially at that first-time home buyer level price. And not that every first-time home buyer is limited to or can't go above, but I think pretty much $300,000 and below that the sellers are going to benefit from paying for the buyer's commission.
And that very well may be, but from the very beginning, and I'm a firm believer of, this whole change in our industry and this whole decoupling of commissions starts with the buyer understanding their costs.
Absolutely.
So prior to this, the buyer really looked at, and correct me if I'm wrong, the buyer looked at their costs kind of in two different ways. One was if they're getting a loan, which obviously if they're working with you, they are. The down payment of their loan was one cost out of pocket. And the second cost out of pocket was just your general closing costs.
Absolutely.
Title closing costs, real estate closing costs, mortgage,
transfers,
accounting, all those type of things. So what we've added at the very beginning now is a third, if you will, closing cost, which is the agent's commission.
The fee for service.
Okay, so how does that affect you when it comes to looking at money and getting people pre-qualified?
Sure, absolutely. So, I mean, there is no set rate, obviously, that the buyer's agent can charge. But if we go with a traditional 6% split equally, usually that comes out to about 3%. So, and we kind of always estimate that the buyer's closing cost, including the prepaids and so forth, are going to be about 3% as well. So you're looking at about 6% cost on the purchase price to that buyer in addition to their down payment, which can be as low as 3% or nothing with a VA loan. And it can be as high as whatever they want it to be. Obviously, that traditional, I need 20% to buy a house, not always the case, obviously. But you add that in and, minimum with the buying cost of 3% and the commission price of roughly 3%. And that can vary by agent, obviously. It's something that we have to calculate in there so that the buyer knows what their full cost can be.
Okay.
And hopefully some of that will be picked up by the seller.
Right.
That's between them and the agent and the seller.
Right. And you're right. At the end of the day, once we go under contract or we negotiate contracts, we can negotiate money at that point in time.
Absolutely. But they need to know,
right,
where you're going is how much are they potentially on the hook for to buy that house.
Correct. Correct. And what the direction should be.
Sure.
So would it be realistic for you to, if I'm the agent, we're working together with a client, would it be common or something that we would kind of look at standard practice for you and I to have a conversation and you to say, hey, look, while you're looking for houses, you need to get this much,
Correct.
right? Or in the form of either a commission or a seller concession, different things like that.
Sure. You with the buyer.
Yes, you as the buyer, or talking to the
Yeah,
agent as you're
absolutely.
working through the negotiations from there.
Yeah.
So a lot of questions happen around that, which is, one, can I wrap the cost of the commission into the loan?
The answer is it depends.
Okay,
Many ways it can be done. You can just include it in your down payment and it would be part of your closing costs. But if you actually want to finance it, I cannot finance your commission as the agent or the buyer's agent's commission into the loan directly as a line item. If it's a buyer's agent commission that you're paying as the buyer, it has to be a closing cost outside of the loan. If it's a paid for by the seller or the seller's agent, it can be part of the cost of the home. So on a $200,000 house, a 3% commission, $6,000. If the house price was $200,000 and the commission's coming out of that, so basically there are $194,000 that's going to the seller, then yes, it can be financed as part of the $200,000. Sometimes it's the mark them up to mark them down. So as long as the appraisal comes in, if that house was sold at $206,000, then yes, we can take the $6,000 out of that price.
Okay.
But I can't take $200,000 and add $6,000 as a line item for buyer's commission and finance that.
so the short answer is no, right? We don't finance commissions into a loan. And to restate that, just so I'm clear on that. So if I'm purchasing a $200,000 house, I can't take a loan out for $206,000 and have you, the lender, pay the commissions.
Correct.
Okay, so we don't do that. So, but there are other ways to do that as well.
Correct.
But the bottom line in all of it, if I'm going to give advice out there to an agent, is it solid advice to say this: work with your lender early, find out what their costs are, your buyer's costs are, and find out which way you're going to negotiate deals. Right? Whether you're going to negotiate with the buyer paying the buyer's agent commission, where you're going to try to get a contribution from the seller, whether you need seller concessions like normal or whatever.
Yes. If somebody's very short or very tight on their down payment, they're going to have some kind of help. Rather it's going to be directly from the seller paying some of those commissions, or the seller giving a concession to offset the pricing. The buyers only have so much money in most cases.
Right.
They're limited as to what they can do, which limits what the purchase price could be. So if we work at a maximum of what the potential outgo is for that buyer, then we can work our way down. So if a buyer is tight on a $200,000 house or $300,000, whatever that number is, then we should be looking at the max. And in this market, it's still a tough market. Not many houses available out there, right?
Right.
So people are still paying at list or generally over a little bit. Not much going for way under list price. So we should be looking at what the max is that they can afford to purchase, rather it be from the cash standpoint or from the budget standpoint of a payment monthly. All those things are important to come into that play. But if you have that discussion early with me, with your agent, that, if 200,000 is your max, you might want to look at 175 houses, so that you're not wasting your time as
Right.
the agent and you're not wasting your time as the buyer.
At the end of all of it, as a buyer, it's really deciding how much money I want coming out of my pocket.
How much do you want come out initially for that closing cost and down payment? And then how much you want coming out monthly.
Right, and that actually brings up a really good point. So let's shift focus, right? Let's get away from all these industry changes, because at the end of the day, everyone has to live somewhere. And I'm a firm believer that buyers want to buy and sellers want to sell,
Absolutely.
right? And I'm a firm believer of that. But I also understand, and you talked about this, the law is supply and demand. It's interesting. I said to someone one time, I got a business degree, but I could sum it up in about 2 minutes, which is called supply and demand. Right?
Okay.
When there's high demand and low supply, prices go up.
Correct.
When there's low demand and high supply, prices go down. Right? sign a certificate, get a degree on the wall. We just talk business. So we all know right now we have a higher demand and a lower supply, right?
Right.
So you're seeing inflated prices, you're seeing those type of things. There's also a term called house poor. So, and you mentioned something, how much do you want it to be a month? Talk about the difference between looking at a monthly payment and helping to determine the cost of where you want to buy versus an overarching number.
Sure. So when I sit down with a client, I'm going to talk about how much they want to spend on the house. And I mean, as a cash price for the house to help them understand that. And we go through kind of a mini buyer education because many of them are not familiar with, as a renter, especially if they're current renters, they know that they pay the monthly rent and that's what they pay. There's no, I have to fix something. There's no, I have to mow the grass. I have to plow the snow. I have to make all the repairs, all these things that happen, but the other thing that is required in our situation is the taxes and the homeowner's insurance. I'm surprised how many renters don't keep renter's insurance, honestly. But, we start talking about those costs and we factor that all in there. And I have come across on my second look, so you brought up earlier, that we look at some people's pre-approvals and they say, oh, I'm going to pay X a month, $1,100, let's say. And I'm like, oh, well, that's interesting for how much money. And we look at what their budget was. And I'm like, did this other loan officer include the taxes and insurance in your payment? And they're like, oh, I think so. I don't know. And then we dig in further and we find out they did. So that $1,100 is not $1,100 a month. It's $1,500. So what I always do is I always look for the area, the primary area that person is going to be looking in. And then we'll go out and find a house in the price point that they're looking for. And then we'll use that tax data to put in there and then a good estimate on the homeowner's insurance. And the homeowner's insurance can vary obviously by carrier,
Right.
riders, all that stuff. But we have a basic amount. So, and then I go through and explain to them when I give them their payment and show them their pre-approval that, hey, here you go. This is what your payment is for your principal and interest, the PI of the TI, and then the taxes and insurance. So of that amount, they know that if they're looking at a house and we estimate their taxes to be $3,000 a month, that if they go look at a house at $2,400 or $3,000 a year, if they go look at a house that's $2,400 a year, their payment's going to probably be a little bit less. And if they find a house that the taxes are $3,600, their payment's going to be a little bit more. So that helps them on the fly to understand. Now we've added that next component that we just talked about is, when we factor in their closing costs, now we got to factor in there also the possible commissions.
Right.
So it all ties in, and we just have to make sure that they understand what the full cost is, what the full spectrum of what they're getting into, because there's a lot to think about when you're buying a home.
Sure. And we always sometimes look at these houses in the end number, 200,000, 300,000, 400,000. But if I said to you, I don't want my payment to be higher than 1,500,
Then we work backwards.
then you reverse engineer all of that.
So we're calculating the taxes, the insurance, and then the principal and interest.
Right.
And the principal and interest, once you're set on a payment with a fixed rate, which most of our loans are fixed rate currently, that's not going to change. The thing that changes is that taxes and the
Insurance and possibly HOA dues.
HOA dues. And that is the thing that if I ask them, condo fees especially, because they tend to be higher than
Right.
HOA, the condo fees. So if you're going to look at a house, and I've had people come up to me and they got pre-approved for a home, they're not going to look at a development, there's no HOA, and then they come back to me and go, I found this house, but the HOA is $100 a month or $150 a month, or sometimes they're less, $400 a year. It makes a big difference because they might not be able to afford that.
Right.
So we have to look at that as well. So that's very important.
Right. So it's kind of like that sticker cost isn't what the end cost is going to be.
Correct.
Kind of like, the other day, my wife and I were talking about me buying a boat, right? And we started at 60,000, but then we ended up at about 82,000,
Sure.
right? They're like, oh, you can buy this and you have 400 a month. It's once you put this in and this in and this in, and insurance and everything else, and storage, and gas, and all those type of things. The cost to operate versus the actual cost to buy.
Nothing worse than having a boat sit in the dock because you can't take it out.
It'd be nice to have it at the dock. It's in the backyard probably at that point in time.
Yeah.
But that's a whole nother story. Don't get me started on boats right now. Okay, so we did mention second look a couple different times. And this is a service that you guys provide.
Correct.
And the way I understand it is this, is that if an agent has a client who already has a pre-approval or is already working with a lender or something like that, and has gotten their numbers, you guys offer a free consultation.
Correct.
That you can take a look at those numbers and see whether or not they're getting a good deal or not.
Absolutely. It's just a second look. There's no pressure from us. We take and we sit down with their pre-approval number. Hopefully they have some printout that they got from the lender that shows some details of it. And then we'll just go through the numbers and simply run through it. Like, hey, here's this, this, and this. And so many times we see that they don't know what the true cost of that loan is. You know, there's a big fee from that lender. We're a flat rate, very low in most of our loans. And, you know, we're very competitive in that. And sometimes the best rate is not the best deal.
Right.
Because there's so many closing costs that they've included. There's always the typical standard ones, but the lender has a cost in there too.
Right.
It's not free for us to do this. And so we're very competitive. So the good thing is when we go through there and look, if we find that we're a better solution and they end up going with us, then we also give them a gift card at closing. So they get a little incentive to spend that time with us.
But really, the second look is about finding out whether or not they got a good deal or whether they could get a better deal.
A better deal. Sometimes it's just the experience. You know, you talked about that earlier, the experience of the situation. You know, somebody that's going to be with them. I work realtor hours. I'm married to a realtor. So I work realtor hours. You're not going to just catch me Monday through Friday, 8 to 4. You're probably more likely to catch me at 6, 7 o'clock at night than you are at 8 in the morning, but you know, that's the case. And I work weekends. Many times I'm doing open houses with realtors. I can do a pre-approval. I kind of joke about the pre-approvals. Everybody asks how long does it take? And I always tell them 2 to 4. 2 to 4 hours, 2 to 4 days, 2 to 4 weeks, 2 to 4 months, and some cases 2 to 4 years.
Right.
But I'm willing to look with folks and work with them to get them so they're pre-approved.
Yeah, so you guys, this second look is a really good service, and I would highly recommend that this really be part of everyone's standard package of offerings when you're talking to clients, because making sure that they have the best financing and the best financing opportunities and options out there, that's a fiduciary responsibility of ours to make sure that they're taken care of. So I highly recommend getting with Coast One and doing some second looks. And I think Justine, our amazing production engineer in the background, just dropped phone numbers at the bottom there. So please take a look and at those numbers, write it down and give Tom a call and talk more about second look. All right.
That's a text too, so they can text that.
Okay. All right. So, well, there you go. It's not a landline is what you're telling me.
Correct.
So do we have landlines anymore? You have a landline?
Technically, yes, but it's just part of the cable package to make.
I was going to say it's the same thing, right? Yeah, you bundle and get it cheaper. I wonder what happened if they ever called that number.
Nothing.
I'm gonna get a message on mine just because I don't have a phone. So okay, so I'm an agent.
Yes, sir.
Why should I work with you? In Coast One.
Well, if you're a Coldwell Banker agent, then especially you should work with us because we're part of the Schmidt family. It's absolutely. And it's only going to benefit your managers, your offices. It's going to allow more. We are a true split with them, so they do benefit from using us as their partner lender. But just more into that, you know, the Melanie and I are the Ohio loan officers. You're absolutely going to benefit from us because we're going to be there. You're our priority. You're our first folks that we're working with, and we're in the offices. Literally daily, I'm in an office, and I go to multiple offices. I travel. I'll meet your clients in person. We're kind of, I hesitate to say, but kind of a boutique lender.
Well, I wouldn't hesitate to say that at all.
We're very not specialized because we have a wide variety of products, but we're specialized with the Coldwell Banker agents, and we're there. You're our first priority. We do work with other agents, absolutely. I'll take all your referrals from your friends from other real estate companies, but the priority is the Coldwell Banker agents.
So the experience to the client.
Absolutely. And we're going to be there for you.
Okay. So I lost my train of thought, and I actually didn't lose my train of thought. Justine's laughing at me in the background right there. right now. But products, you mentioned products, and I'm a firm believer of products. I'm a firm believer of one of the values that you as a mortgage broker, senior loan officer has to me today, when I may not have a client that I need to get you with, is for me to be able to market and talk about the products you have.
Absolutely.
So give me your top three, and if you need a minute to think about it, I can always fill and ramble for a while. But give me your top three loan products that you think are most beneficial to the consumers out there today.
Well, for sure, on the first-time buyers, we have first-time buyer programs.
Okay.
We have multiple, but traditionally it's the OFA product here in Ohio, and we do a tremendous amount of those. The OFA products, it's a very good product. It's down payment assistance. It's a lower interest rate. There's multiples. There's 3 steps in most of those programs, and it's good for not only your traditional FHA, but it's also good for VA, USDA, and a conventional loan. So don't think first-time home buyer, I got to go FHA, I got to get them the perfect house, because people worry about the appraisals. You can get a conventional loan with first-time home buyer assistance, and it's a great product. So that's the first-time home buyer, the OFA programs. Those are probably the number one. The next one is VA. I'm a retired military, so 22 years, 1 month, not that I kept track, but I like helping the VA buyers. So I absolutely am there for any VA buyers. And we can combine that with OFA too, if they qualify, which is a great program. So then rural areas, I'm running in a few USDA now. Not too many. There's not many areas that qualify for USDA, but we have some outlying areas in USDA. So it's a great product for that. And then of course, you stay with the conventional or the FHA. So those are, the traditional products that we have. And then the other thing is for the agents that have investors. We have DSCR loans, the debt service coverage ratio loans. They're in our Smart series of loans, and that allows anywhere from as little as 20 to, as much as they want to put down, but 20 to 30% is typical where we're at. And we only pull their credit, so we know their rating. We check the bank account to make sure they have the down payment, and then the appraisal we look at is it's a special appraisal. Will the payment be covered by the rent? So as long as the rent covers the payment, in most cases we're 1-to-1. As long as that's covered, I'm not pulling your client's tax forms. I'm not pulling your client's income. I'm just looking at strictly as that investor, will this house cover the payment of that?
So if I got, and I love this, that's SmartVest, this payment or this option right here. So if I've got the money to put down,
correct.
I've got good credit,
Mm-hmm.
and you're going to appraise to the rent rolls. And
correct.
As long as the average rent roll in that area is higher than what my mortgage payment would be,
Right at
we're in, equal or better. We're in.
correct.
Right.
Yeah.
So this is a great opportunity. So if I had, 100,000 in the bank, I could do this a few times.
Correct. Now our minimum loan on that is 100,000. So the minimum purchase is going to be around 130, 150,000. And the nice thing is it's the only product we have that we can close in an LLC, and then we can close multiples at a time. Now, if it's your first time investor, let's do one.
Right.
And then let's step up from there.
Right.
But if you're an experienced investor and you got 3, 4, 5 houses you want to buy, we can do them all at one time.
Now, for those of you who know me out there, know that I'm a fan of video. I'm a fan of video marketing. Here's my suggestion to you: is get a hold of Tom, get a hold of Melanie, and do some video work for your social media. Talk about these products. Talk about ways in which you can benefit the general consumer out there. Now, also at the same time, make sure your sphere hears about it. Make sure everyone's talking about it. I would have these products in open houses. I would have these products in every place that I went because they are pretty popular. Right?
And we have flyers. We can make up flyers for you. They're co-branded with me and you as the agent, or Melanie and you as the agent. We can make up those flyers for you. So that's through our AMP program, we call it.
Mm-hmm.
It's going away soon, hopefully, because it's just getting better. But we have many flyers that we can make. I think it's well over 100 that I can make up on all the different products. And then obviously we co-brand with List Reports. So that's a great way to get your open house materials and so forth. And yeah, absolutely. Just talk to us and we'll get you the collateral you need.
Perfect. All right. So closing thoughts.
Absolutely.
No, those are yours.
Oh, mine?
Yeah, your thoughts on
Well-
lending. Not closing thoughts on how cool I am, but closing thoughts on lending.
Well, of course, you're very cool.
Right, I know, but
Yeah.
that's not what we're talking about today.
Closing thoughts on lending. Talk to us. Give us a chance to come out and talk to your clients. We're going to take care of your clients. We're going to treat them as our own, probably better than our own, because they're your clients. We're going to work with you as the agent to get the best program for your clients out there and get them, to the closing table as quick as possible. And then once they are there, or once they get the accepted offer, that's the biggest challenge these days, right? Is get that accepted offer. It starts with a great pre-approval. And then we'll absolutely call the listing agent to talk to them about how well your client is pre-approved. And that's the other thing, just to touch on that real quick, Dave. When Melanie and I especially do a pre-approval, we are pulling credit. We are looking at all the documents that they have. And the last thing we want to do is give you a pre-qual or a weak pre-approval. And you go through all this time, spend all your time out there with the client, and you get the deal approved, accepted, and we're going through there and sorry, we can't do this deal. Something changed.
Right.
We don't want to do that. So we're very careful on what we do there.
Wonderful. I was asked yesterday about what you look for in a partner, right? I was asked this question just in general. And I'm a firm believer of partners. I'm a firm believer of the one-stop shop, if you will. The value that we provide to the clients we serve comes in the team that's wrapped around us.
Absolutely.
Because we do not do anything in isolation, nor do buyers, in this case, and we'll just talk buyers,
Sure.
nor do buyers buy in isolation. There's a whole host of very complex technical services and things that need to happen. So I'm a firm believer in partners. And I was asked this question, and I challenge you to think this way when you're looking for your partners. And I answered it in 2 words, and the 2 words are this: experience and experience. Think about those very differently, right? A good partner will be experienced, and you guys have a whole host of experience successfully closing deals with really good products.
Absolutely.
Right. And that's the first part, is you want to have and you want to offer to your client someone with really strong experience and success. And then experience, which is the experience that they have in the transaction. These are big transactions and we work in a referral business. The experience your client has with you and the team around you is the make and break for the referral down the road and the repeat business down the road.
Sure.
So create that experience by using people like Tom and Melanie that are experienced. Make sense?
Absolutely. I couldn't agree more.
You guys, thank you so much for joining in today. As always, subscribe to our YouTube channel, and you'll be able to see all these episodes from there when you subscribe to that YouTube channel. It is Cullenbaker Schmidt Brecksville. We will be back next week with another episode with one of our partners, as we continue to focus on building that team around you and the partnerships here in the Partnership Corner. Justine, thank you so much for being on that back end and taking care of everything. Our production coordinator, our technician, our producer, our director, Justine. And I think that she's probably going to close us out and take us out of here with a little bit of music today. So, Justine, whenever you're ready, take it away. You guys have a great day, and we'll see you next time.